Welcome to Rally Trade Morning Market Review. I want to believe you can see my screen, right? Showing make daily profit. And so this is a Rally Trade Morning Market Review, usually every day from 8 a.m. to 9 a.m. in the morning. So this is the analysis we try to analyze the market for you, both fundamental analysis and technical analysis, and of course sentimental analysis. Try to give you our own sentiment about the flow, the movement of the market, right? So this is Emmanuel Odogwu reaching you from PHCT. Okay, so we're going to start immediately, right? So I think we have good numbers now in the room. So we're going to start immediately, okay? All right, so I want to believe everybody can hear me. So if you cannot hear me, you can just drop it in the chat room. But I believe you can hear me and you can see my screen. So just like we always do, we try to look at the market from different perspectives, right? So we look at the market, we look at events unfolding on the marketplace, right? That's the fundamental analysis. Okay, so we look at global events, how they are affecting our trade, our market. So after that, we switch over to technical analysis side of things. Okay, so making you a technical analyst, you have to become a technical analyst. So if you're new joining us, please. Trading is very sweet, it's very good. I mean, it gives you opportunity to trade when you want to trade. And of course, trading gives you a lot of money, right? So if you have not been taking it seriously, try and double up your effort, right? Visit our offices for more classes and of course online classes also. Okay, so let's get started. So let me share my screen right now. So I'm going to share the Forest Factory, right? So those of us joining us for the first time, yeah, so I'm going to www.forestfactory.com. So I'm going to a browser, right? And that is www.forestfactory.com. So I've been able to share my screen. Please check if you can see my screen. This is forestfactory.com. So please check. Just type FF. Type FF on the chat room if you can see my screen, please. Just type FF. Okay, thank you. Hope I can see you there. Thank you. That covers for every other person. Thank you. Thank you. So this is forestfactory.com. Just for joining you for the first time. So this is one of the websites among many other websites where we get to check for fundamental events, right? So events that has the capacity of affecting our trade, affecting the market. And of course, we want to position ourselves, right, in the positive side of things, right? So when this event comes out, it can affect you positively or negatively. But as a trader, we are taught to position ourselves in the positive side of things. That means we position ourselves in the profitable side, right? So the side that gives you profit. So you trading the direction the market gives you profit. So what I always do once I open this website, the next thing I do is to just go to the weekly view, right? So once you click up this word calendar at the top here, to switch you over to weekly view. Okay, so you can see the news for the whole of the week, ranging starting from Sunday, Monday, Tuesday, Wednesday, all of that, right? So quickly, our attention is usually on this other part. This part is say impact, right? So impact talks about the how much volatility we're expecting on the market, right? So how much movement we're expecting. So how much consign the news will give to us, right? So the yellow one is low volatility, so we don't really care to look at it. So the medium one is the brown one is medium volatility. Of course, we always look out for the red ones, okay? So our attention is always drawn to the red news, right? So that's the one that has capacity of moving price drastically on the chart. So if you look carefully for Monday, Monday was so should I say it's a mixed blessing, right? So there was no red news, right? So that means Monday was just you're going to trade technical analysis. And that was yesterday, it has passed. Then for today being Tuesday, the 20th of June 2023, you can see there is no red news, right? So that gives you another opportunity to trade technical analysis very well without having the fundamental disrupting your analysis, right? So just like I always say in all of my classes and events, fundamental events or fundamental analysis have no respect for technical analysis. So it means if you analyze your market technically, one fundamental or one news can disrupt all of the analysis, right? So, but for today, it's going to be a good day for technical analysis. We can enjoy technical analysis, I mean to say. It's going to be a good day for that, okay? But for tomorrow, being Wednesday, the 21st of June, we have CPI, right? CPI for the UK, right? That's going to affect the Great Britain pounds. Okay, so let's just stop here, right? Because we don't have any strong fundamentals that can affect the market. So I would like to switch quickly over to technical analysis. Okay. Those of us just joining us, this is Rally Trade Morning Market Review. All right, usually 8 a.m. to 9 a.m. every morning, right? Every weekday, Monday to Friday, right? So I am Emmanuel Odogwu. Remember, this is e-trading. Come on, guys. Now let me switch over to my chart, right? So that we can start doing technical analysis. All right, guys. I've been able to switch over to my chart. Please also indicate if you can see my chart. I believe you can see it, okay? Just to fulfill all righteousness. For you to be called a trader, you need to understand technical analysis. You need to understand how the market moves. You need to understand the direction the market is going. You need to understand the market structure. So this technical analysis, I'll be doing it with market structure in mind, right? So trying to analyze it following the structure the market is building, right? So I call market structure the language of financial markets. So that means the market is moving and communicating to buyers and sellers what is about to do next. So if you understand the language, then you are in the right position of maximizing that move, right? And of course, taking trade in that direction. Okay. So like I always do, I like to start from the USD index, right? The USD index, because most of us traders would like to trade the dollar, right? Or most of our trade, right, revolves around the dollar, whether you're trading oil, whether you're trading the commodities, whether you're trading indices, whether you're trading gold, and of course, most of the major currency pairs, they all have a lot to do with the dollar. Okay, so we try to look at the dollar index here, right? So that we can compare what is happening to the dollar, right? So this analysis will be beneficial to swing traders and of course intraday traders. Okay, but intraday traders are those that want to see profit in a day, right? And swing traders are those that want to stay longer on the market. Of course, if you want to stay longer, then you position yourself to make more profit on the market. Okay, more profit on the market. So as we can see on the chart, so this is H4 time frame. The market USD index has been trading upside, right? Until we have this reversal here, right? This market shift. So after this market shift, the instrument started trading to the downside, right? So it is important for you to know when the market is shifting, right? So because it will enable you to change direction. It will enable you to change direction. So if you were buying, of course, once the market shifts, then you will start selling, right? You start selling. You start selling. Now, you make more profit when you have a directional bias. So you want to write somewhere directional bias to have a bias on the direction you think the market is going. That's just what we call directional bias. So understanding the market structure, right, gives you that edge, right, over other traders, right? Because if you watch carefully, all of this is higher highs, higher highs, higher highs, and of course higher lows, right? So that's the characteristics of the upward market structure. But we got to this point where this is a low, the market puts in this low, and of course gave us this higher high. Then and afterwards it gave us a low that happens to be lower than this low. That's a violation there, right? Because all along we're seeing higher lows, but this is the first time we are seeing a lower low. So from there, the market has to do a good retracement, right? Giving you a better price to do the opposite, and that will be to sell. So if you take your Fibonacci and you draw from somewhere up here, down here, you can see that the market retraced very well into beyond our 60%, right? So from here, the market has turned. And of course, they're going down. Now, this has passed, but I'm just showing you this so that in the future, you will know when the market has shifted, right? Know when the market has shifted. So, ladies and gentlemen, USD index is now riding on a downward momentum, right? I mean, the strength is going down, right? So, as you can see, it's going down. So, what's the characteristics of it going down? Please allow me more time to explain this, okay? Because once you understand what is happening to the dollar, right, then you can, of course, trade very well across all of the instruments that you love to trade, okay? So now the characteristic of the downward trend is, of course, lower lows, or of course, and lower highs, right? So all of the liquidity are trapped the target liquidity are trapped below the lows, so the market head towards that low to take out that low. The target liquidity are trapped below the lows, the market head towards that low to take out the low. Now the protected liquidity are the high, so the market will try to protect this high, right? We don't want to go above this high. We don't want to go above. So we call it protected liquidity. Of course, all of this protected region is where your stop loss should be, right? The target liquidity is where your take profit will be. That means target. That means that's the direction. It's like a magnet. Is attracting the market, drawing the market towards it. Okay, so we have concluded it's on a downward trend, but we are seeing something happening right here. So this is a push downward, trading to the downside, and of course we have a retracement to the upside, right? Then of course after that we have another impulse leg. We have another impulse leg that targeted this liquidity and of course took it out to form a new low, right? Then of course we have a retracement. So what we're having right now, this small strength we are seeing in the dollar between yesterday and of course just yesterday is because of the market is trying to retrace. But how much retracement will be a good retracement? They use Fibonacci and draw from the high of the leg to the low of the leg. Then of course, if this market retraces very well, just above 50%, I want to believe all of you can see my screen. Okay, you're asking, Bini, you're asking the period of the MAs. I'm not talking about MAs for now, okay? But I can tell you the period of my MAs. So just follow up my analysis, please. So if this market retraces very well into just above 50%, wow, it's good. It's good, fantastic. But if the momentum is high, you may not get above 50%. So 50% is considered as a very high price, okay, to continue the selling, okay? So, but from what we can see on the H4 time frame, USD index is going down. Why H4 time frame? H4 time frame because it gives you, it enables you to see the flow of the big money on the market. Okay, so I'll now switch over to Euro USD. Of course, I'm sure that's what you have been waiting for. So Euro USD now. Okay, I'll switch over to Euro USD now so that we can see what is happening to our choice instruments. So Euro USD, yeah. So on Euro USD, please, I already did this analysis in one of my videos, okay? So if you're interested, you can hit me up to get it. So Euro USD, you can see Euro USD have shifted, right? So it's trading to the upside. So it means those of us swing traders, you can still leave your buy trade running, okay? You can still leave your buy trade running. You can see, I want to believe none of us is having a sell trade on Euro USD as a swing trader because you will just be not seeing the negative, right? You just be not seeing the negative. Don't notch the negative, okay? Close the trade very fast with a small negative, with a small loss, and then switch direction and start making profit to recover the losses and of course make more profit. That's how you trade. You don't hold on to a negative trade for a long time. So we saw that the market keep trading to the upside, right? Keep breaking structure to the upside. It took out this high, So this is what we call upward trend. Okay. Now we saw. Let me complete this drawing. So from here, this low took out this high to form a high. So from this high, so we expect a retracement, and it gave us that retracement. But this retracement it gave us, if you watch carefully, is not up to our 50% retracement, right? But if the market did not fall up to 50% retracement, it means the momentum is very strong. And from what we saw on the USD index, it means USD index is going down. So that means the dollar is weakening, right? The dollar is weakening. You trade what you see on the chart, right? It's good to anticipate news. It's good to anticipate events, but it's best to trade what you see on the chart. Best. So from what we're seeing on this chart, the dollar is weakening, right? So that means a good time to sell the dollar. Okay. So from here, the Euro US is going up, right? From the H4 time frame. So we're not going to take our trade on the H4 time frame. We will now fall down to a lower time frame, right? We'll go down to a lower time frame, okay, to pick our trade. So I would have preferred a retracement that falls up to this level, just below my 50%, okay? But if the market is about turning from this 32.8, right? So I can enter with a smaller lot size, right? Like I did in one of my analysis, I can enter with a smaller lot size. So if the market gives me more retracements, right? If the market gives you more retracement, then I can complete it with a bigger lot size, right? All right, guys. So I will now switch over to 15 minutes time frame or even 30 minutes time frame to pick my trade. So this is the first instrument we're analyzing that you're going to pick a trade on, and that is the European euro versus the United States dollars. Okay. So let me reduce my zoom so that we can see clearly. All right. So now, since we have analyzed on the H4 time frame that there is strength in the that there is weakness in the dollar, and of course that will suggest strength in the euro. Okay, so we want to take a buy position, right? But remember, if you want to buy, you look out for a support. Don't forget that. Now, support is where we have high demand, right? And demand is created by buyers. Buyers want to buy at a low price. You can connect all of these dots. It means this is our support. So you can see it here. This area is our support. So if the price can give me another opportunity, I would like to buy here. Follow me, please. So if the price can fall down a little bit below, just lower, right? Like that's giving me another opportunity. So anywhere around there, I would like to buy from 1.09051 to 1.09131. So around this area, I would like to take a buy trade. But for what is it called now? But for the aggressive guys, right? For the aggressive guys, now if you're aggressive, there is a way to do it. Okay, like this, what this guy said, Ray Dalio said you have to be aggressive to make money on the market, and of course conservative to save money. So as a trader, you have to be both aggressive and conservative. Okay, so the two. So my advice for you is if you want to be aggressive, you go in with a smaller lot size, right? So aggressive means you don't want to wait for this pullback. You just want to enter. So you can go with a smaller lot size, and that's what I'm doing right now. Instant buy. Okay, so then I'll set that take profit there. So I just went in with a I just went in with a smaller lot size. Then if it retraces further to my choice area, this area, then I'll have a pending order here, right? And that will be a buy limit to pick more trade. But if this one triggers, if this trade start moving up, why not? I'm already on the trade. I did this same analysis on one of my videos. So if you want to understand it better, you can reach me, okay? You can reach me. I'll drop my number at the end of this session. Please, just to remind you, this session is also, we are also live streaming this on YouTube, right? On YouTube. So if you check YouTube after this whole analysis, this whole session, go on YouTube and you can still watch this same analysis again, okay? Because it's being recorded and like we are live streaming at the same time, okay? All right then. So we have entered an instant buy on Euro USD and we have a stop loss, right? But however, for the conservative guys, you can still wait, right? If you cannot take the buy immediately, you can still wait. If the market retraces to where we call support, our local support, then you can do your buy around here, okay? Guys, trading is sweet. Now, let's, I think that's for Euro USD. Let's move very fast. Let's look at, I'll try to do it very fast, okay, so that we can cover a lot of instruments. Let's look at GBP USD very fast. So, guys, I have switched over to GBP USD. I hope you guys are with me. It's GBP USD. Okay, you guys keep asking what's the period of my MA. Okay, I'm using 21 period and of course 50 period. Okay, 21 and 50, 21 and 50, 21 and 50. Okay, Adewale, I can see you there. You're asking for good analysis. Okay, please just follow me. 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 I have to go through the currencies pair before switching over to go. So GBP right now, very fast, quickly. So from what we're seeing right now on the H4 time frame, that's my tradition here. On the H4 time frame, the instrument is trading to the upside, as you can see, breaking structures above the highs, right? And of course, maintaining structures at the lows. Okay, so that is the characteristic of the upward market structure. So, of course, let me draw this for you, please. Anytime you want to analyze the market by yourself, just take your time. Use this tool called trend line, right? Draw it. For example, once you draw it, it becomes easier and clearer for you to know what is happening on the market. Now, one of the things you do on the market is to make sure that the market is looking easier and clearer for you to know what's happening. Because if you're confused, and that is recipe for losses, okay? Confused, don't know what to do, that is a recipe for losses. Knowing what to do, understanding what's happening on the market, of course, recipe for profits and your profitability. So this is the structure broken to the upside. Of course, we expected a retracement. The market is give us this retracement here. So we draw from the low, right? Take it to the high. So this is the retracement I'm expecting. If you have been following up this analysis, you will know that this is the way we do make profit on the market. So just below 50%, right? So that is the retracement. So that means my buy trade is still valid, even if there is a retracement towards this area. Of course, I would like to even do more, right?
Recording in progress.
All right, guys, please check again if you can hear me and you can see my screen. We have a little issues there, so just check if you can hear me, guys, please. Hello, everyone. Can you hear me? Can you hear me? Can you see my screen? These two things, please. I can hear you. I can see your screen. Just do it fast, please. I can hear you. Okay, I can see you, Femi there. Femi, it means you can hear me. You can see my screen, right? Wonderful. Adedayo, Stella, celebrating you guys here. Come on. Okay, so all of you can hear me and can see my screen, so we can continue this analysis very fast, very quick. So if you're having a buy trade on GPUSD, please leave that trade open, right? You're already having a buy on GPUSD. You want to leave the trade open, right? You're already having a buy, leave the trade open. But you're not having buy, let's analyze and see when we can enter the buy, because we want to enter buy, okay? So the market puts in this retracement to 38.2, and of course that area is a strong level too. If the momentum is very strong, okay, this area is a strong level. The market can pick up from here, just like what happened here. Look here, please. The retracement did not fall as much as below 50%. Okay. So the same thing can happen here. So you can pick up from here. So we switch over to 15 minutes time frame. Then that is our choice time frame for picking our trade. So we are just a little bit late, as you can see. So we are just a little bit late, as you can see. So perhaps if we were here like 15 minutes or 30 minutes ago, we would have picked the trade from here. Why not? Because that level is our local support, right? As you can see, this level is our local support. So we would have picked the trade from here. We're just a little bit late. So we are not just doing the analysis. We are also showing what you can do by yourself, right? What you can do by yourself. So would have picked the trade from it, but it has already left us. So I'll wait for another opportunity, right? Because we don't chase the market, right? We hunt the market. So new trader chase the market. Don't do that. Don't do that. Hunt the market. So I'll wait for a retracement, right? So I would like to do a buy limit around this area. So a buy limit around 1.27690, this range, to 1.27570. So around this range, I would like to do a buy. And if I do that buy, then my stop loss will have to be, let me see what's happening here on 30 minutes time frame. Then my stop loss would be below the low, right? So I can put my stop loss. So I would like to do a buy there, somewhere here around this area. Then I would like to put my stop loss just below this low, right? But that would be a tight one. What's tight? Okay, I like to put my stop loss there, and of course, my take profit can be take profit one. This area, I'm dropping the price so that you can see. This can be take profit one, 1.28121, and of course, this can be our take profit two, right? So because this high is the target liquidity. This high. Okay, I think our Euro USD is already giving us profit, so that's an aggressive entry. So those that enter the trade, I hope you're seeing some profit, right? To ease off the SWEP subsidy removal. All right, guys. Okay, so those that took the buy on Euro USD, they are aggressive entry. I'm sure they're already smiling, right? Or you did not take it. So if you took that buy and you're on profit, let me hear you, please. Drop a message. Let me see. Okay, please. So this area above this high is our target liquidity. So that area can be your take profit too. Okay. Now that's for GP USD. We don't have time. Let's move very fast. All right, guys. Those that took
Yes,
the
I hear
buy,
you.
those that took the instant buy, I'm sure you should be on profit by now. That's what I'm trying to say. Huh? Remember, we promise you make profit daily. I'm sure you should be on profit by now. Okay. So we have done Euro USD. Let's do another currency pair, USD CHF. Okay. USD CHF. So on USD CHF H1 time frame, the tradition here, you can see that we are breaking structure to the downside, right? So that means we are expecting, so that means this low is our target liquidity. Just imagine we have not seen all of this structure, guys. Imagine we have not seen all of this structure, all of this. Just imagine for 1 sec that we've not seen all of this structure, right? So if we have not seen all of this structure, the market has not put in all of this structure. That means below here is our target liquidity, right? Or our target point. Guess what? The market came down, took out that low. So that means if the market is going down, these lows are the target. So that means this low is the target. So that means very soon this market has given us this high. Okay, so it's coming to take out this low. So that means we're expecting this kind of movement, right? We're expecting this kind of movement. So yesterday I looked at this USDC share. I do this Fibonacci here, and as of that yesterday, it has not tapped this 50%. You know, 50% is considered right as our above 50% is considered as our premium price. So this morning you can see it has tapped it, right? Wow, I missed. I would have entered the buy. It has tapped it. It has tapped it. I would have entered the sell rather. Sorry. It has tapped. So that means we are heading to the downside. Guys, we're heading to the downside. So quickly, this USDC share H1 time frame. So I'll now switch over to 15 minutes time frame. I'm looking for sell opportunity. This is how to establish your bias on the market. Sell opportunity. Guys, sell opportunity. Okay. So I would like to enter a sell here at this area. You can see my screen very well. I would like to enter a sell at this area, right? Even though the market has tapped it. Guys, I will still want to enter a sell. So instant sell again on USD CHF, instant sell. Okay. Then my take profit, I'll just drag it below and low and lower. So I'll just keep my take profit here, right? That's manageable, right? He can ease off the pressure of the subsidy removal. Oh my God. So that's take profit there. Then of course, I will put my stop loss just above this high. Guys, if this price retraces, I mean, move upward further, give me opportunity to enter more, I'll enter more here, right? I'll enter more here. So that's like stacking it, right? Not putting all your position in one place, okay? So that's for USD CHF. Guys, we have analyzed three. Let's look at okay, somebody said we should look at Euro GBP. I'm trying to be fast, right? We need to be done before 9. So on USD JPY, you can see what's happening here, right? So the market is trending to the upside. Okay, let me just do Euro GBP so that we can cover enough ground. So I've been able to honor your request. You requested for Euro GBP. Let's do that one fast. Nobody requested for DJ JPY. So let's leave that one. So Euro GBP very fast now. Guys, what can you see? What can you see? I'm sure you can see the movement of the market diving downward. The market is on a slope downward, right? So on a slope downward. Now, please, you need to have directional bias to make good profit on the market. Directional bias. So just guess what? Just guess if you have been selling right from here, right? Sorry, please. If you have been selling right from up here, right? And that's around May. Just imagine if you have been selling Euro GP, selling Euro GP. I mean, your directional bias is to sell, right? Now, if the market is retracing, you're waiting for it to give you a better price, right? A premium price. So continue the selling. If it's retracing, waiting for it to give a better price, a premium price, so continue the selling. That is how to make consistent profits on the market. I have to make consistent profit on the market. So, but from what we are seeing right now, moving this up and down. Now, from what we are seeing right now, we can see um, now this was the low, right? So look carefully. This was the low that took out this low to form a new low. Then, of course, we have a high, right? Like this. Then, of course, we have a low. So this is internal structure. So this was not the low. So actually, this is the low. So this is the point where this structure was broken, right? And of course, we're expecting a retracement. How much retracement should we call a good retracement? Fibonacci comes in, so around this area. So that means we might just be looking at the trader that asked for Euro GBP. We might just be looking at Euro GBP still trading to the upside, right? Because that's a retracement, okay? Retraces further to the upside, so it might retrace further into this area. Then after that area, then we might be looking at it to reverse and start going down. Remember, there is we're expecting news. We're expecting news on GBP, right? This week, Thursday, Friday, right? And that's news on their interest rate. So that news is most likely going to surge and give more strength into the pounds, right? So for swing trading, we might just be seeing Euro GBP giving us pushing to the upside into this area, just above our 50%. Then from that area, we will be expecting further movement to take out this. Remember, the lows are the target liquidity. So we will just be expecting the market, right, to trade below this low, okay, and going down like this. So if you have a buy trade, right, you can leave it open, right? But if you have a sell trade, the sell is on negative, you can still leave it. You can still leave it. You can still leave it, okay? So I've created a picture where I was able to itemize the benefits of trading with the market structures. Okay, so before the end of this session, I'm going to show you. Okay, then we'll go through it very fast. So this is for Euro GP on the H4 time frame. On the 15 minutes time frame, quickly, I'll just here where we can take our entry here. Remember, we said it is still pushing to the upside, right? It's still pushing to the upside, still pushing to the upside. So as you can see, we are having higher highs on the lower time frame, higher highs, right? So to take the buy, you might just wait for a little retracement down here, right? So around this area, for those of us that want to trade Euro GBP, right? So around this area, let me show you the area. The area is around here. So 0.85364 around this area. I'm sure you can see my price at the far right. So around this area, you might want to take a buy. Why? Now the buy is targeting this area. So if you take a buy, here should be your take profit, right? So if you're buying, you could fine. So if you take a buy around this area should be your take profit. And guess what? Don't leave the buy for long because the higher time frame, the major flow of the market is downward, right? Major flow of the market is down. So around this area, you want to start selling and taking the price downward again. Okay. All right, guys. Now this is for currency pair. I think we can now switch over to gold. You have asked for gold, and now we have Ugochi. You're asking for GBP, JPY, USD card. Now we're not going to take. We cannot really take all of these. So let's look at GBP, JPY. Yeah, GBP, JPY, because we have to cover the indices. Okay. And of course some commodities. So GBP, JPY, you asked for it, you requested for it, and you requested for it on G, right? All right, guys, for GBP, JPY, you requested for it, so there we go. So H4 time frame, as we always do, right? So you can see enough strength in the pounds, right? Enough strength in the pounds, enough strength in the pounds. So if you have a buy trade already on, you might want to leave that buy trade open, okay? Yeah, for a swing trader. But if you are not seeing a negative, right, you might want to wait a little bit because we expect more retracement. So this is what we have here. This is the break of structure. Then of course we have a retracement, very small retracement. Then afterwards we saw this long push to the upside, right? So we're expecting GBP to gain more strength during the course of the week, right? So, but then remember, retracement is very common to the market, right? We expect it. So, we're expecting good retracement, right? For GBP JPY. So, that's why I say if you are not seeing a negative, you might want to leave it, okay, until maybe it retraces a little bit. So, I'll just draw from this low to this high, right? This low to this high. So this instrument might see good retracement into this area. This instrument might see good retracement into this area. But remember, the directional bias is still a buy, but we're just looking at the retracement, okay? So this instrument might see good retracement, right? That will bring it down to this area, or even touching 38.2. Okay, so that's all. So we're expecting a retracement. We're expecting a retracement, please. So on the 15 minutes time frame, that means we're expecting price to move to the downside. That's the meaning of expecting a retracement. So we're expecting the price to trade to the downside, right? So we're expecting movement to the downside. So that means you might look out for sell opportunities, okay? But remember, the sell opportunity is not for swing, it's for scalpers, it's for intraday. So that means if the price pushes up to give you a better price, I mean a higher price, so around this local resistance, you might want to do a sell. So around this local resistance, you might want to do a sell, right? So if you sell, your take profits will not be downward. So this area is around 181.970 to 182.150. Okay. Now this analysis is for you. You will be requested for a GPJP1. Then if you do a sell, right, your take profit, of course, above your stop loss above, right? You can use your risk tolerance to set your stop loss. Then of course your take profit somewhere below. Now let me switch over to gold. Gold now, please. Let's do gold, guys. Let's do gold. Now this instrument has been trading sideways on the H4 time frame, right? Of course, that's how the market cycle moves. So we have the market will give you it will flow either upward or downward. That's what we call upward trend or downward trend. After some time, to go through consolidation, right? Now, why is consolidating? It is accumulating a lot of orders, right? Accumulating a lot of orders to take the new directions. Okay. Now, from here, we saw that this instrument, gold, has been trading downward, as you can see. But after some time, it got stalled, right? Started trading sideways. So this is the sideways movement here, right? But if you look carefully, still having our market structure in mind, if you look carefully, this was where it took out this the high here to give us a new high, right? Then since then it has not taken out this low. Okay, we saw it took out this low from here, right? So that means the downward trend is still very strong. So this is the low that took out this low, right? So that means there was a target liquidity somewhere here, but this low here, this low here took out this low, right? So that means we are still heading downward until gold proves otherwise. Now that's for H4 time frame, very big. So we're going to nose dive into a smaller time frame, right? 15 minutes time frame, so that we can look at what we can do. But this is the range. Gold is still trading inside this range, right? As you can see, this drawing here is still in a range. So this is the upper band of the range, and of course this is the lower one, right? So as long as this market remains inside the range, you only wait for the price to get towards the resistance. You can see it's called verified resistance. Okay, so you only wait once it gets towards this resistance. You look out for what we call change of character, right? So you look out for a violation of the tenets of the upper higher highs and higher lows. So that means a new low has to be lower than the previous low, right? To show that the market is about to turn. So that's where you start doing your selling, okay? The same thing at this lower band, okay? But for today, since we have analyzed the USD index, we saw weakness in the USD index. So that suggests strength in gold. So that means gold is supposed to trade to the upside because we saw weakness in the dollars. Remember, we started by studying and analyzing what's happening to the dollar. Okay. So I'll move over to 15 minutes time frame now. On 15 minutes time frame, we're going to look at for trade opportunities, right? So we have missed one trade opportunity already. How do I mean? This is a low. It came to tap in the low and take out this this low, right? So we have missed this trade opportunity. This was a trade opportunity we have missed, right? Because we saw weakness in the dollars, therefore we want to trade go to the upside. So in order not to chase the market, we might want to wait for a retracement, right? Before we can take our trade. We might want to wait for a retracement before we can take our trade. So anywhere around there, I would like to buy gold for today. For intraday traders, I would like to buy gold around this region. So let me just paint it for you. Around this region, I would like to do a buy on gold. So around this region, I would like to do a buy on gold. So around this region, I would like to do a buy on gold. Then, of course, my stop loss will have to be below this low, right? So look at what I'm doing around this region, around 1952 to 1950. Okay, so around this area, I would like to do a buy. So that means I'm expecting gold to give me another opportunity trading to the downside, right? Then a buy here on gold, please. Buy here on gold. Then, of course, my take profit will have to be at this area. Up here, take profit one will have to be up there, and of course remember that high we're expecting gold to get to. So and of course that high will have to be take profit too, right? So that means you can choose to take your profit here. So your entry will be somewhere here, right? And of course you can take your profit here. Please take notes, take notes, take notes. Your entry will be somewhere here. Then you can choose to take your profit somewhere here. Then of course your stop loss here. Now that's for gold. Now let's look at the chat room, and then let's get some questions there. Gold, please. Okay, Daniel Luashon. Okay, I've done that. It's gold we are doing right here, right? It's gold we are doing right here. So somebody's asking of a US 100. Okay, now please, this is the analysis for gold, right? So we saw some weakness in the dollar, so we are expecting gold to trade to the upside, right? So that weakness we have in the dollar, what gold was doing, gold was just accumulating position, all right, trading sideways. So that means we are just expecting it to break to the upside, right? Because of weakness in the dollar, because of weakness in the dollar. So okay, guys, we are back now. Please, can you hear me? No, the audio is back. Please check now. Check again. The audio is back. Please check again. The audio is back, please.
Yes, I hear you.
You can hear me now. Okay, fine. Let me share my screen. Sorry for the network issues there. Sorry, please. Let me share my screen again. I'm sure you can see my screen now. So let's rush to round up, please. So I think this is the analysis for gold, right? But aggressive traders, from what I'm seeing on gold, the aggressive guys, you can still do a buy, but I want to wait for a retracement, right? Let's carry along the conservative guys, okay? So if the price retraces to this level, I would like to do a buy. Then US 100, please. US 100. While this instrument has been trading towards the heavens, as you can see. As you can see, these instruments have been trading upward, upward, upward. So I want to believe you have not been nursing any negative trade, right? Right. So because one of the ways we come out successful on this, the way we analyze this market very well and come out profitably is to cut short the losses and of course start trading the new direction. Of course, start making more money. Okay. So this instrument is trading upward. So if I zoom into the area, you can see it has been breaking structure to the upside. And of course, after breaking structure to the upside, then it will do a retracement. So this is the movement to the upside, right? And of course, you can see this gap. This gap suggests pressure pumped into it. So since the dollar is weakening, now we are seeing that displaying directly on US 100. So this is a high, right? And of course, this is the retracement. So if you look carefully, this retracement seems to be a good retracement, right? So because if I draw from this low to this high, you can see there that it has retraced just below my 50%, right? That's a good retracement for US 100. So for US 100, I'll go to a lower time frame. Now I have my directional bias on the US 100, right? So I'll go to a lower time frame, 15 minutes. Then I'll look out for a change of character trading to the upside, signaling that the market is about to trade to the upside, then before I will take the buy. So 15 minutes time frame very fast. So on the 15 minutes time frame, I think I've already seen that change of character here. Now this is what I mean by change of character. The market has traded to the downside. So this is a lower low. And of course, we expect a high that is lower. And afterwards, it gave us a lower high, a lower low rather, which is good. It gave us a, now this high happens to be higher than this high. So that's a shift, right? That's a change of character. So afterwards, we expect a retracement. Now this retracement even took out this low, right? So anywhere around there is where the buying is supposed to take place. Anywhere around there, where the buying is supposed to take place, right? So the buy is supposed to take place. So a buy on US 100 will be a good trade, right? Instant buy, why not? Or you wait for a retracement if the market decide to give us another opportunity to enter. Okay. So a retracement into this area, we like to do a buy. So if you do a buy, then your stop loss. If you do a buy, then your stop loss have to be below this low. Below this low, right? So you want to use a stop loss below this low, then of course your take profit uh, above this level. So your take profit can be somewhere around here. Okay. So we saw weakness in the dollar. So we are trying to trade that weakness in the dollar. Those of us that took the trade on Euro USD, USDC share, those two trades giving us massive profit. You can check. Scalpers can begin to start closing their profits. And of course, swing traders, you might want to stay longer, of course, because it's still going to give you more profits. So the market will give us an opportunity to trade towards the area. They will do a buy, right? Please take note around this area, this price region. You want to do a buy. We are buying the US 100. Okay. Now that's the analysis for US 100. That's the analysis for US 100. So what about US 30? Now that US 100 analysis can cover up, right? Can cover up for US 30. But let's just take a look at US 30. So US 30 is also doing the same thing, breaking structure, trading to the upside, right? Breaking structure, trading to the upside. So we saw this shift here. So this was where we got the shift. Afterwards, the market has been trading to the upside. So if the market is trading to the upside, sir, you want to look for buy opportunities, right? That's how to trade with low risks, okay? Because there are two types of trading. You can trade with low risks or you can trade with high risks. I would want you to trade with low risks, right? So we draw from this low, our fib to the high. So this retracement is on our 38.2 region, okay? 38.2 region. So we can move over to 15 minutes time frame. That's our choice time frame for taking our trade, okay? So on this one, I would like to do an instant trade. I would like to do an instant trade. So that would be a buy there on US 30. Now I've given you the signal already for the entries already for US 100, right? So this will be my take profit. And of course, I would like to use this place as my stop loss, right? So this is almost 1:1, right? 1:1. 1:1. All right, guys. That's for US 100. That's for US 30. The US 2000, the same thing, trade to the upside. Please, if you don't have good capital, you may not want to come towards this area, US 100. Okay. Right? If your capital is anything less than 100K, please don't trade on US 100. So do a top up on your account. Call your account officer. Say, I want to top up my account so that I can trade US 100. Yes, you stand to make enough profit trading US 100, but you need good capital. Because once you understand the market structure, you can see this structure has been trading towards the upside. Benefits of understanding market structure very fast. Let me show you some of the benefits of understanding the market structure. Okay, so quickly, if you're using market structure to analyze your trade, some of the benefits of using market structure. So I think I've showed something like this in one of my analysis here on the money market review, right? So this upward structure, this downward structure, right? You can just use your phone and snap it, right, to understand it better. Upward structure, downward structure. You can use your phone and snap it. I hope you can see my screen. Upward structure, downward structure. So, and these are the break of structure, the structural low, structural high, equal highs, which is a magnet. The market will be attracted to it, all of that. Then afterwards, then of course, these are the benefits. These are some of the benefits of understanding the market structure. One of them is you trade alongside the big money flow. Now, you make losses when you are trading against the big money flow. Okay, you make loss when you trade against the big money flow. But you are supposed to trade along the big money flow. So understanding market structure is simply the flow of the money, right? The flow of the money. So if you are against the flow, then of course you'll be crushed. But if you are in direction of the flow, you benefit. You benefit. So understanding you trade alongside the big money flow, you are not left alone in the woods. So it means you are in charge. So you're also trading with the trend. And remember the trend is your friend. The number three, high probability of a win trade. If you understand the market structure, you have high probability of wins, right? Okay, somebody's asking Yusuf, I should do analysis on D30. Okay, after this, I'll switch over to D30. Then strong reasons to exercise hope on a negative trade. Now, this number 4 is very important, right? Most persons just wait for their negative trade to reduce negative without knowing why they are waiting. But guess what? If the market structure is in your direction, you can wait, right? You can wait. So that's the hope. I mean, high trade confidence give you opportunity to gradually increase your position, right? Now low risk and high risk trade opportunity enables you to cut short your losses, right? So very important. So if you're trading with the market structure, right, it gives you opportunity to cut short the losses. Then of course, after that, look at this, please. Tips for trading success, secret of longevity in trading, secret for success in trading is simply cutting short the losses, right? Cutting short the losses, cutting short the losses. Now, somebody is asking for D30, so let's quickly do one more before we can round it up. It's already 9, so D30 right now, guys. Follow me up, D30. Let's do this one quickly. So for D30, so just like we always do, we analyze from the uh, H4 time frame. So you can see that this instrument is trading towards the upside, right? And breaking structures to the upside. So this was where we got the shift, right? The change in the market direction, market structure shift. So this is a low, right? A low that is lower than the previous low. That's market going down. But we saw that the market traded to this level. That's two equal highs and went down and broke that structure. Okay. So that means the market have shifted on the H4 time frame and now start trading up. So if the market have shifted and now start trading to the upside, it means you want to look for buy opportunities. So luckily for us, we got a gap, and this gap is gap up. Gap up means pressure, pump, or push upward, right? Pressure to the upside, pressure to the upside. So if there is pressure to the upside, it means the market is about to still move up very well, right? So this retracement, let's look at this retracement levels. This retracement has gone far below our 50%. It has even touched our 78.2. So this area is a good area to look at for buy opportunity. Guys, you don't want to miss this one. Thank you for calling our attention to this instrument. So you want to look for buy opportunity here, this shaded area. So I'll now switch over. Then of course, if you look for that buy opportunity, your stop loss will be below this low. Okay. Then of course your target high or your take profit will be at this high here. Okay. So once again, please don't forget this session. We are live streaming it on YouTube. It's also being recorded. Okay. So if you miss anything, you can just check YouTube and of course get all of this analysis again. Okay. So this area is the area I want to look at for buy opportunity. Okay, so you go to 15 minutes time frame now. I want to look at for a buy opportunity. So buy opportunities around this area. So I would like to do a buy around this area, guys. So okay, so I would like to do a buy because so if you do a buy, your stop loss. So we are going in with a buy, right? With a buy. Then of course our take profit. So the guy that said we should do D30, we have done it now. Okay, we are looking at buy opportunity. So this will be your take profit one, and of course thus the above this target high will be your take profit two, guys. It will be your take profit two. Then of course just below that low will be your stop loss. Let me reduce the zoom. So below this low will be your stop loss, right? That will be the stop loss. So guys, this is where we draw the curtain for today being the 20th of June 2023. This is the morning markets review. My name is Emmanuel Odogwu. Thank you for joining me. Thank you for joining us. Please join us again tomorrow on another exciting morning markets review. Let me drop my number so that you can reach me for further explanation, of course, anywhere you're confused. So 09026264507. Emmanuel. So anything you miss, please try and of course go to YouTube. Just type Rally Trade, search for Rally Trade on YouTube. You get to see this analysis being recorded so that you can watch it again and again. Okay. Remember, education is powered by repetition, guys. So the more you watch, the more you understand. So I've dropped my number there, and that's for everyone, right? I dropped your number. I've not seen it. Really? Okay. So 09026264507. So that's my number there. Thank you very much, guys. Bye for now.